Hey everybody, how's it going? Happy Tuesday, September 15th. My name is David Utrobin. I work at the foundation doing community development, and welcome to the Tuesday MakerDAO community call, which I get the pleasure to facilitate. And today is going to be a pretty interesting one. So, for those of you that are new to the call, this call typically covers the weekly Maker Relay, which is just a weekly publication that a DAO team or a team in the Maker community that is setting itself up to be kind of a domain team uh, produces every week. And they produce it to cover kind of what's going on in the current events of governance, what's going on with basically what does an MKR token holder need to know week to week. And that's a really great publication for it. So we try to go over that publication, and it also covers interesting partnerships and integrations if there are any. It covers some community highlights. It covers a bunch of really great things, and so that's what we typically cover in this call by default. But the other thing we cover in this call is interesting projects, any interesting guests in the DeFi ecosystem that are working with DAI or the Maker protocol more broadly, and we invite them on the call to kind of demo what they're working on. Have an open mic for the participants of the call, for the audience in the call to kind of do some light Q&A, and to just in general kind of explore the different things that are happening in the ecosystem. And so today we have Spencer Graham on the call, and he is part of the team that is working on SaveDai. And I won't give away too much detail about what SaveDai is just yet, because I'm going to invite Spencer to come on in just a second. And I want to echo, so here I'm inviting Spencer onto the screen, so he should come on in a second. But I want to just echo that this call is meant to be very laid back, meant to be very conversational, and so if you do have questions for Spencer, feel free to ask them in the chat. I will happily relay those questions on your behalf. And likewise, if you're interested in actually hopping on the mic or hopping on the video yourself, just comment and ask, and we're totally open to that. So with that being said, hey Spencer, how's it going?
Hey, great to be here.
Yeah,
Thanks for having
likewise,
us.
likewise. So us. So who else is on the team?
Yeah, and I'm getting a little bit of an echo here. I don't know if anybody hears that. It's a little bit hard for me to. Ooh, it's my own voice coming back at me.
Oh no.
Um,
Let me see. Let's see if I mute myself. Do you still get?
um, yes, I still do. Let me see if there's a different mic that I'm accidentally using.
Yeah, take your time. In the meantime, I'm gonna put up the SaveDai website so that anybody who's in the call can kind of check them out. The website links to Medium articles about it, the GitHub repo, the Twitter account, you name it. So you guys can connect and see what this project's all about.
All right,
Cool.
can you
So
hear me now?
yeah.
Oh, I still got it, but I'll
No.
try to get through it. Um, So you asked who is us. I've also have with me Ksenia and Doug. I think Doug might be user DAFC. I don't see him elsewhere, but I know him. He's in here. So we're actually going to tag team this presentation. I'm not sure what the right way to get those folks on the screen too. But Ksenia is going to be the one that shares her screen. And I'll start off with kind of an intro, some context to SaveDai.
Nice. So in the meantime, I'm gonna invite Ksenia on the screen, and likewise, I'll invite the. Should I just start off with inviting Ksenia, and then if I forgot your other teammate, the user
Doug,
Doug. Yeah. If Doug wants to come on the screen, just put it in the chat, Doug, and I'll send you the invite. But for now, I'll invite Ksenia.
thanks.
No problem. Yeah. So, yeah, brief intro. You were saying.
Oh, Doug is on here, although I don't.
Oh, cool.
There I am. Hey, everyone.
Oh, here's Ksenia.
And
Can
here
you
I'm
hear me?
inviting Doug. Yeah, we could hear you.
Mm-hmm.
Hey, nice to meet you, Ksenia.
Nice to meet you.
All right.
So we have some slides that might just help with some visuals. Oh, there's Doug. Ksenia, do you mind putting up those slides?
Sure, let me just figure out how to do that.
Yeah. Nice.
Awesome.
Present.
Yeah, cool. We see it nice and presented. So sweet.
Awesome.
Sweet. Okay, so yeah, we are SaveDai. I'm Spencer, and then there's Ksenia that you see on the screen, as well as Doug. Go to the next slide for. So yeah, we have a few things to talk about. I think we have about 22 more minutes. Is that right, David?
More or less.
We could probably fill up a couple hours, so we'll try to keep this relatively brief. I'm going to give just a bit of an introduction and an overview of SaveDai, and then Doug's going to talk a little bit about more in detail, and then Ksenia is going to go into some of the future stuff or the stuff that we're working on now. So SaveDai, as an introduction, SaveDai actually started, let's see, yeah, almost like technically over a year ago. It's been a long journey. So it started with a tweet that I sent out that I really wanted to see a combination of interest-bearing DAI with some insurance, but in a single token, kind of a self-insured interest-bearing dollar. Nexus Mutual was the only insurance option at that time. And there's some challenges there where there's some KYC. The actual insurance is not tokenized, so you couldn't really put it all together in a smart contract. But I was going to ETH Denver, and just before ETH Denver, the open protocol was announced. And that actually made that original idea possible, using O tokens instead of Nexus Mutual contract cover. And at ETH Denver, I met Ksenia. We hacked on SaveDai. We made some good progress, didn't have something that was fully working. So afterwards, we kept going, and Doug joined the team. We kind of made a public announcement. People started getting pretty excited about it, which was cool validation of the concept. And so we kind of just kept going.
Nice.
So basically, where we started was trying to create an easy way to create an insured high interest savings account. So basically package everything up into one ERC20 token that represented an insured high interest savings account. And that's the frame that we started with. And that's still our primary goal. But as you'll see, as we start talking a little bit more, that's changed a little bit. There's a little bit more nuance to that. And a lot of that is because of some of the challenges and sort of the environmental changes that we've run into along the way. So why do we even want to do that? And the answer is that there's kind of this big gap between traditional savings accounts and DeFi savings accounts. Traditional savings accounts, you can earn some interest, but it's not very high. They're pretty low risk because FDIC insurance here in the United States helps us, but it's kind of difficult to open the account. You're kind of beholden to the bank, etc. DeFi kind of offers you the exact opposite, where you get awesome interest, and it's really easy to open an account and move your money around. You're not beholden to any bank, but there's quite a bit of risk. And there's also some UX challenges for anybody who is not super familiar with DeFi and Ethereum. And so what we're trying to do with SaveDai is merge together and bring the best of both worlds, adding insurance and making it much easier to actually procure. And so I think that's what the next slide hopefully shows. with
So
some
really
sunglasses.
quickly, there's an interesting conversation in the chat. So Akiva writes, but DAI is already insured, and I think and he's referencing the system surplus and the fact that maker dilution is there to ensure the solvency of DAI, right? And also, even as a further point, there's like emergency shutdown and global settlement, where if the protocol is shut down, you could redeem DAI for whatever the dollar worth of underlying collateral is. But my understanding, and correct me if I'm wrong, about SaveDai is that it's actually insurance on yield-bearing DAI. So it's like insurance on CDAI, on ADAI, on any DAI derivative that might not be insured. So if you have your DAI sitting in Compound and Compound blows up, then SaveDai comes in to like insure you that you can recover your funds, right? Is that the idea?
Exactly. That's a great clarification. So DAI is awesome. I have DAI. I love it. But right now, it doesn't really give me much interest. Maybe the DSR will come back up at some point soon.
Or you could lock it in Aave and risk getting it stuck in a black hole for a little while. But
exactly.
Hey man,
and I have some
100%
DAI in
interest rates,
Compound,
baby.
and like that's great, but also there's definitely some risk there, especially as we start stacking these protocols on top of each other. We just kind of get compounding risk in addition to our compounding interest. So what we're trying to do with SaveDai is insert some, we pay a small cost from the interest and insert some insurance into the system that covers that full stack of protocols.
Makes a lot of sense to me.
So I think at this point, I'll pass it to Doug to talk about sort of the insides.
Cool. Thanks, Spencer. Yeah, so as we were just kind of discussing, at its most fundamental level, SaveDai is all about bundling that interest-bearing asset with a protective insurance put option piece, right? And so today, where SaveDai is at this moment, we're currently bundling Compound CDAI token with Open's corresponding OCDAI protective token. Next slide. So as far as the core functionality goes, and we can, if anyone wants to drill down deeper, we can certainly take it offline. But at a high level, at the heart of SaveDai, there's really three core pieces of functionality. Of course, the ability to mint SaveDai, the ability to claim or exercise insurance on your SaveDai, and lastly, the ability to withdraw your SaveDai. So when it comes to minting SaveDai, again, just super high level. First we go about determining the prices of CDAI and OCDAI necessary to mint a given amount of SaveDai before having the user transfer DAI to our smart contract. At which point we go about making or minting the CDAI from Compound and then purchasing OCDAI protective tokens from Uniswap. And then once our smart contract has accumulated those tokens, we go ahead and mint the SaveDai and then pass that along to the end user.
So Doug, quick question. So I know right now we are in an incredibly high gas cost environment. How intense is it to actually mint? Like how, I guess, gas intensive is it to mint SaveDai currently?
That's an awesome question, and I don't have exact numbers for you.
Well, how much here? Maybe I could rephrase it. Like, how much DAI does it make sense for me to deposit to mint SaveDai without losing like a significant amount of the principal on like the gas costs, right? Like, does it make sense with 1,000 DAI? Does it make sense with 10,000 DAI?
Yeah, good question. So certainly, the more the more savings, right? The more you're willing to invest up front. I think that the key thing to think about with these gas costs and what's going on in DeFi today is that SaveDai is a little bit unique in that it's a savings solution, right? So the idea is that you're not constantly moving assets around. Instead, you're a value holder, if you will. So the hope is that these investments that you're making over time, they won't be, we're not talking about a lot of transactions over and over and over again, right? But rather, a traditional savings solution where you might be investing every month or every week. But to getting back to your question, I don't have. We should do a deeper dive into just real numbers as far as gas costs and whatnot. And I don't have that information today, but we can certainly circle back.
Yeah, cool.
Almost certainly, the gas costs are going to be way too high for anybody's real taste right now, and that's one of the challenges that, along with everybody, we've been running into, and it's something we're thinking about how to resolve.
Ethereum to scale.
Yeah,
absolutely. Good question.
Yeah.
So then on to claim, and this is giving users the ability to exercise their put option for a given amount of SaveDai. So the way and we don't have to get into the details of Open too much, but essentially Open has a two-sided marketplace where users can obtain coverage, and then providers can earn money from providing that coverage, right? And in order to provide coverage, users have to lock up a given amount of ETH in a vault, and there's I think it's 140% collateralization ratio today. At which point they can then mint those O tokens and sell them on Uniswap, or include them in a liquidity pool on Uniswap. And then lastly, withdrawal, and we have 3 different flavors of withdrawal today. So the first is giving users the ability to unbundle the SaveDai and OCDai. And we just send them back both of those tokens relative to the amount of SaveDai they're withdrawing. Next, we have, sorry, I'm getting a phone call. Oops, where do you guys go? Next, we have the withdrawal for asset function, which gives users the ability to first swap the OCDai that they have for SaveDai, and then we send them back the total cumulative amount of SaveDai. And then lastly, we have a withdrawal for underlying asset, which unbundles the SaveDai and OCDai, exchanges them for the underlying DAI asset, and that's what we send back to the user.
Yeah, sweet. That's for an advanced user, having those 3 options is really great, because you never know if people don't want to exit their SaveDai for tax reasons, or they're all of those little sub transactions kind of can be considered real events, right?
Mm-hmm. Yeah.
So that's a really it's important that those options are there. But what's interesting to me is that I know a lot of the users in the space are not super financially privy, so it can come off as unnecessarily. Why are there 3 different ways to withdraw? But to the credit of your team, that's really great functionality. So
cool, thank you. And it's kind of about finding a balance, right? Because you don't want to get too granular and have all these weird kind of esoteric withdrawal options, right? But you want to have those core, really necessary pieces that most folks would get the most value from. Next slide.
Before you continue, Doug, I just want to add one little thing there. So I think it's probably been obvious now that really what SaveDai is doing is not creating any net new functionality. We're really just wrapping existing stuff together, which is one of the reasons that we want to make it as easy as possible for people to unwrap and kind of revert to the original state if they so desire. There's not really, SaveDai is really a convenience thing. It makes it easier to do stuff, and you can package things together. But if somebody is a power user and they sort of realize that they're better off doing things independently, we don't want to stop them from doing that. We want to allow them an easy path to getting to that power user state.
Yeah, you're simplifying it for the end user who doesn't want to figure out open hedging against their SaveDai, and you guys are basically saying, here, this is insured. You have a few different ways to get back to your underlying, and this makes it easy. And I guess because of the gas cost, it's longer scope for holding it. Since you are earning some yield, maybe it'll eat through whatever $100 of gas. But if you're holding it for a year and you're not unbundling it, and you're actually maybe even using it for direct transactions, it makes sense to hold SaveDai. But I know that obviously this version of SaveDai is just the kind of proof of concept phase, and I know that your team has a ton of stuff on the roadmap and kind of a ton of goals to expand on this idea and to make it more efficient and to make it actually work a lot better. So yeah,
Cool.
am I right? Am I right in all that?
Yeah, absolutely.
Okay, cool.
In fact, this plays in nicely for this slide. So, this is just a quick look at the interface, and I think if we do have time, we might drill down a little bit deeper. But really, circling back to Spencer's initial point, we're trying with SaveDai, we're trying to bridge the gap and provide a simple saving solution. And perhaps maybe we can pull in some folks that are more accustomed to traditional finance, right, and kind of get them exposed to the space with something that's a rather simplistic solution that's a little bit safer than what you're seeing now in DeFi in general. But that's the idea, to kind of bridge that gap and get more traditional savers or investors using something that's on chain. Next slide. Unless do we want to?
Did we want to do the quick demo of the front end?
Maybe we come back to this once we finish the rest of the stuff, because Ksenia, your stuff is pretty juicy. I want to make sure we have time for that.
Okay, fair enough.
Yeah, so I'll move quick in the next one.
I'll present.
So as far as some of the challenges that we're currently experiencing, so first is just the current low interest environment. So right now, some of the interest rates are quite low, and conversely, Open's insurance expenses or costs are quite high. So it really doesn't today, with the return and the interest rates we're seeing, it doesn't warrant the cost for Open at the cost they are at today. So that's something that we don't have full visibility into how Open's pricing mechanisms work, and I think we're trying to learn as much as we can. But we need to see a pretty sizable shift as far as their costs.
So it sounds, Doug, forgive me for interrupting. So it sounds like the next version of SaveDai will need an Oracle feed for dynamic insurance rates, and based on whether the insurance rate matches the yield of the underlying token, it'll either have to kind of tell you like, hey, you're actually losing money, or hey, you're actually gaining money, and like that's a whole different level of obstacles to get past.
Yeah. So things are headed in that direction, where folks have more flexibility and they can kind of see what other options are out there on the insurance side, on the interest-bearing asset side, and kind of package the best solution together for them at a given time.
Right.
So you're absolutely right. Things are kind of headed in that direction.
We also, just to add it, like when we show our front end, we do pull that information. So a user, like if we deployed SaveDai today, the user went on our front end, they would be able to see immediately that, given this low interest rate environment, right now it wouldn't be worth putting in any DAI with where rates are. So they'll be able to see that immediately. Like we're pulling what Compound is paying in terms of interest and what the cost of the insurance is, and then they see what that difference will be.
Yeah, that makes sense.
And the reason actually that a user can make that decision up front is that right now the way insurance works is as a one-time purchase. And that's part of the limitation of Open's protocol right now. Yeah. Like you purchase the protective put option, which acts as the insurance for a given time period once, and you purchase that up front. So you're basically paying up front for the insurance over the full period. Whereas ideally we would pay a small sliver like every so often that you can actually take from the interest that you generate. So right now there's a little bit of a user experience thing that we're kind of fudging over and smoothing over, but it's not ideal. And that's one of the things that we want to find a way to improve in the future.
So the current open puts, you're saying, have a fixed time limit, and that's also another part of the limitation of the current SaveDai. So eventually, I guess, like not like some sort of perpetual put option that has a continually adjusting premium or percentage rate that they're pulling is basically where it's going to have to go, something like that.
That'd be fantastic.
Yeah.
I did see something recently about a way with balancer smart pools to create like a renewing rollover kind of thing, where you switch the weights as the next period starts. So maybe there's something there too.
Yeah, totally. It sounds like the space is ripe with potential for solutions. So
Definitely.
that's exciting.
Yeah. Next bullet. The comp token. So a few months ago, we were just wrapping up the SaveDai contract, all excited, getting ready to push things up to test them out, get them on mainnet, and then of course Compound drops the comp token, right? So we immediately started to solicit feedback from people interested in SaveDai that want to use it, and of course, overwhelmingly, they wanted to be in a position where they could accumulate those comp tokens as well from the SaveDai that's in the SaveDai contract. So we've since kind of taken a step back and re-architected things, and I think Ksenia is going to get into that more in detail in a moment. And then lastly, we've kind of touched on these limitations with the Opens protocol. Just the two other things I note is right now, last I knew, Open only supported protecting DAI and USDC. So there's only those two tokens in particular. And then, of course, a month or two ago, they were the victim of a hack around 400K worth of value. So just other considerations, other things to think about based on these third-party solutions that are being integrated into SaveDai.
Is Open decentralized or centralized?
They're decentralized.
Yeah, it's decentralized.
Gotcha. Thanks.
Yeah.
That's it?
Yep.
Doug?
Yep.
Cool. Cool. So I'm going to go over the rewards farmer, which is our solution to distributing rewards tokens. So this is what we started.
Question, Ksenia.
Yes.
Before you start, so by rewards tokens, you mean governance tokens?
Yeah. So comp.
Okay.
Yeah.
So why does
token.
SaveDai need a governance token? Is my question.
Well, we need a way to distribute rewards tokens that users would be earning from, depositing their DAI into, for example, with SaveDai Compound. So we're taking our users' DAI, depositing into Compound, and they're earning comp. So we need a way to distribute that comp to those users.
Oh, interesting. Okay. So you would be forwarding the actual governance token that the underlying SaveDai is generating.
Yeah.
So SaveDai wouldn't have its own governance token. It would rather, depending on the version of SaveDai, you would be able to, with your SaveDai, have a claim on whatever governance tokens are being. Okay, gotcha.
Exactly.
That's right.
That makes a lot of sense. Cool.
Yeah, because like we just mentioned, our users. Of course, we got feedback, and all the users said yes, we would like to earn the comp that that we earn on the DAI that we're contributing. So we had to think of a solution of how to distribute those comp tokens. One of the aspects of SaveDai is its simplicity. So we have one smart contract that's accumulating all of the SaveDai and OCDAI. And because one SaveDai is equal to one OCDAI and one SaveDai, we haven't had to keep track of individual user balances. So that's a challenge, right? When we need to figure out how to distribute the comp token for each user. So we talked about different options. One option, of course, is to track user balances within the SaveDai contract, and then use some kind of timestamp method to calculate the amount of comp that they have accrued. So again, that goes against our objective of simplicity. And then to calculate the appropriate amount of comp is difficult because that rate of distribution is constantly changing. So our solution is the rewards farmer that we're currently working on. And this uses a proxy factory architecture. So I won't go into too much technical detail about that, but essentially we built a factory that deploys proxies that we're calling the farmer proxy. And each farmer proxy is mapped to a user. And that farmer proxy is what holds on to their interest-bearing token. So again, in SaveDai, that'll be the SaveDai, and that's where their comp will be accumulated. So I have a diagram in the next slide that I'll show the flow of how that works. But we're building this as a library that developers can use in their projects because, since Compound released Comp, there's obviously been a lot of governance tokens coming out in these protocols. So we see this as a useful library that other developers can use in their projects. So we're building the rewards farmer, and then we're actually taking it and integrating it into SaveDai. So this is a diagram that shows the flow of a user's DAI, which hopefully gives a clearer picture of how the farmer proxy works. So we have, let's call her Alice. She's depositing her DAI into the SaveDai contract and getting, SaveDai in return. And then within the SaveDai contract, we're taking a portion of that DAI and going over to Uniswap and swapping it for OCDAI, the insurance. And then another portion of that DAI goes to a farmer proxy that we're deploying on behalf of Alice. That DAI gets forwarded to that farmer proxy, and inside of that farmer contract is where we mint CDAI and where her comp is accrued. And so later on, if Alice wants to deposit more DAI into SaveDai, again, we forward that on to her farmer proxy that has already been deployed. And that mints more CDAI. And if the comp goes above that threshold, I think it's 0.001, then it'll automatically be transferred to that farmer proxy. And then we have functions within the SaveDai contract where Alice she can claim her comp or look up what the balance of her comp is. So I hope that kind of explains it. We are pretty much really close to finishing up the rewards farmer, so we're really excited to release it and get everyone's feedback on it. And we're also, like I said, integrating it into SaveDai as our solution for dealing with the comp distribution.
Yeah, this is really, really cool. Even Akiva's like, this is amazing. Yeah, so yeah, I get it. So basically, because the SaveDai address holder is the address that you use in the proxy, whatever claimable comp there is through comp, you're able to basically do that same claim as so long as you're, like, basically the proxy reads that you're holding the underlying CDAI, something like that.
Yeah, so the underlying CDAI lives in that proxy contract.
Ah, I see.
And when
so
the
proxy contract is actually part of, inside of the SaveDai wrapper.
So the SaveDai deploys the farmer proxy, and then in the SaveDai contract, we're mapping the user's address to that farmer proxy address.
Got it.
And so every single user has their own farmer proxy, which is their little bubble where CDAI lives and where their comp comes.
That makes sense because in Maker Governance, it's very similar. Like the voting proxy for Maker Governance does the same thing where you lock your MKR and you get a corresponding IOU token. The IOU token is totally abstracted, but the IOU token is used when you're, like voting on stuff and like et cetera, but your maker just kind of stays there. But I'm like non-technical, I don't code, but I'm trying to like wrap my head around all this stuff, so you guys are doing a great job explaining. This is a really helpful diagram, so great job, Ksenia.
Cool, thanks.
Yeah.
So yeah, like I said, we're close to finishing this up and just excited to get everyone's feedback on it and improve it however we can. Okay, so next, this is kind of looking into the future, and I think we've touched a little bit upon this. SaveDai, this version of SaveDai is specific to, DAI and CDAI, and then using the OCDAI that expires next year. And we see other versions of SaveDai. So we want to build a self-insured asset factory, the Save Token Factory, that's basically deploying different versions of SaveDai. So some examples, this top one, basically the same setup as our current SaveDai, but this could be using the next version of OCDAI for 2021 or 2022. We could also build a SaveDai that's depositing the DAI inside of Aave rather than Compound. You know, insurance, we have a question mark right now. I don't think Open has options for Aave, but maybe if they do in the future, or if there's another insurance protocol with ERC20 tokens that's released, you know, we could use that. And then of course the rewards token being Lend. And then we see this being used for other protocols that maybe take other assets. So we have Balancer as an example that I think accepts up to like 8 underlying asset tokens. So a user could deposit those tokens, receive the Balancer pool token, you know, whatever insurance token we decide to use, and then the rewards token is the Balancer rewards token. So this is something that once we finish up with this version of SaveDai and release it, we want to start working on this factory that creates these different, you know, versions of save tokens.
Yeah, this is super cool.
Cool. So our next steps is, like I said, completing integrating that rewards farmer into our smart contracts. We've got to complete our front end. If we have time to show you a demo, you have like pieces of it done, but still needs some work. And then of course, testing, as we all know, is super important. An audit, of course, and then launching the SaveDai DApp, and then moving on to work on that self-insured factory.
Nice, very nice.
Yeah, so that's all that we have. And then here's some resources. I think you posted them in the beginning, but we've got a lot of the documentation, our website, our GitHub, Docs, Twitter, Medium, Gitcoin Grant. And then do we have time to do the front end demo? I'm not sure
you can show it, and while you're showing it for these last few minutes, Lewis is asking. So in my wallet, I'm gonna have SaveDai. I can trade it like ADAI, CDAI. Is the SaveDai the governance token itself? So no, SaveDai isn't the governance token itself. But it's if you have SaveDai, it will give you a claim to whatever the governance or reward token you're getting, right? Like, I guess that's the answer. How would you
exactly
answer it?
Yeah,
exactly.
And then we have, like, if you have SaveDai in your wallet and you transfer some of that SaveDai to another user, we are making sure that we're transferring that portion of CDAI and comp that's claimed, or sorry, CDAI and that proxy contract to the new user's farmer proxy contract.
Oh, that's interesting, because the proxy contract is going to update the address for claimable tokens, and then the old address will still have whatever up until that point of transfer it could claim. Oh, that's really cool. Yeah, sweet.
Yeah. So yeah, this is our front end really quick. I'm running this. We've deployed it on, I think on Rinkeby. Oh, wrong one. Sorry, just a sec.
Take it down.
Just want to make sure I'm connected to the right network. MetaMask isn't opening, so I'll just. Yep, okay. Yeah, so we deployed the SaveDai contract to, I think it's Rinkeby. I wish I could open my MetaMask and show you guys that I have SaveDai balance, but I deposited some Rinkeby DAI. And I have SaveDai here in my wallet.
Sweet.
And then on this deposit screen, it'll show what your balance is in DAI and then what it is in US dollars. So this is current. All of these are hard-coded, these values in the white boxes. So we have the estimated premium rate. So this would be the insurance from, what is this? The compound interest rate. Current.
So premium rate will be the cost of the insurance. So it's the cost of the OCDI token.
Right, the cost of the OCDI token, and then current uninsured interest rate. So this is the interest rate coming from compound. And this is basically the combined. So the combined of the compound So you're getting the 5% interest rate minus the 2% that you're paying up front for the insurance.
So in the production front end, these aren't going to be hard coded. They're kind of going to be reading whatever the SaveDai is actually based on. So they'll be getting live reads of this estimated premium rate, whatever the comp
That's
rate
right.
is. Yeah, cool.
Yep.
Exactly. If this were live right now, so just to illustrate the reason that we need to expand to other forms of insurance and allow a little bit more flexibility.
Yeah.
Like right now, that 2% I think would be like 12%, and the 5% I think we most people probably know that it's around 3% right now. So if you subtract 13% from 3%, you get very bad.
Yeah.
So we can't really make that work right now.
Right. And it's so challenging in like an environment where all these rates are really dynamic and they really feed off each other. Like that's the problem a lot of people have with like stability fees. It's like it's a dynamic rate. So what are you gonna do? You're trying to make a 1-year bet, but like within the last year, the stability fee has gone everywhere from 0% to 20%, right? So it's like what's your predicted average? And I guess like that's the whole betting game of insurance, right? The insurance is underwriting the bets, and yeah, I don't know, something like that. But anyway, this was really fascinating. I certainly learned a lot, and I certainly, yeah, this is getting me excited for the future of insured tokens by default, and I really like the stuff that you and your team are working on. Spencer, Ksenia, Doug, you guys are totally MVPs. Yeah, and if anybody has any like final questions, feel free to put them in the chat. And yeah, I'm not sure if you guys are going to stick around for the rest of the call, but also feel free to chat with the SaveDai team in the chat. I won't get distracted, or I'll try not to, I promise. But yeah, so with that being said, thank you so much for coming on the call, everybody. And I think we are gonna transition to MakerRelay.
Thanks, everybody. I'll stick around in the chat.
Sweet.
Thanks for having us. Yeah, I'll stick around for a bit too.
It was a pleasure.
Bye.
All right. So, for those of you that are here, there is a green button that says "Check out the latest MakerRelay" right underneath my face, like probably like right there, and it should take you to the forum, to the Maker forum, to the MakerRelay tag, and it's listed by default for having the latest at the top. So MakerRelay 12 has launched, and you could see it here. Also, I know Long for Wisdom comments underneath it with any further updates, because MakerRelay is launched every Monday evening, at least for me. I believe it's like Monday, actually also evening for Tim. But regardless, let's kind of get into it. I'm gonna just move my my screen with all this Crowdcast stuff here, and then I'm going to move MakerRelay here, and I will share my screen. All right. So in just a second, you should be able to see it. All right, MakerRelay 12. Okay, sweet. So yeah, I'm kind of going to go through it in order. Feel free, again, to raise any questions. And actually, before I go through it, I know that there were a couple of questions that were asked at the beginning of the call, one by Kalpesh and another by Edward. So Kalpesh asks, what's the update on YFI for collateral? I believe that, do we have a section this week on collateral stuff? No, we don't. Well, regardless, you can go to the forum and search up the collateral status index, which I will link you right now. Collateral status index, and the collateral status index has basically the current status of any of the and any of the collateral applications that have existed. So YFI, okay, why does Control F not do that? That's annoying. Either way, YFI is somewhere in here. You're just gonna have to find it. Yeah, I guess I don't know. Maybe it hasn't been added there, but either way, it should be in here somewhere. And if it's not, just check out the forums. I'm not 100% sure what the latest on the Wi-Fi collateral application is. But yeah, I think it's also ultimately up to the discretion of the domain teams, and I think the number one consideration for them right now is how much DAI would be generated from a given collateral, and so YFI, being a crypto darling of a few months old, wildly successful, it's great, but I think in general for this month at least we have these plans. So we have Loopring, we have Link, and we have PaxG, we have Comp, and as you could see, the domain work for the risk has been done on 3 out of 4 of them, and then likewise on Oracle's, that team has done the domain work on 3 out of 4 of them, and smart contracts work has been done on all of them. So yeah, I believe these are actually going to be in this month's governance cycle, and yeah, so hopefully I answered that question for you, Kalpesh. And then the second question that you guys can't see, but I'll answer, is from Edward. It says, is there a way to make the peg a bit harder than it is now? A peg that is too soft doesn't work in the long term. I agree, and I believe that that's actually the motivation behind many of the recent governance actions that Maker Governance has taken. For example, I guess we're going to go through it in a second, but for example, the very, very recent executive vote that went up over the weekend. Sorry, my mother is calling me. I have to mute that. Yeah, so this recent executive vote, if it will load. Oh yeah, there it is. Okay, cool. So this recent executive vote actually addresses the DAI peg in a number of ways. It lowers the collateralization ratio of the USDC-A vault from 110 to 103%, which basically allows individual vault holders to get more leverage on their starting capital, which increases DAI supply, right? Same thing for PaxA, which is another stablecoin. And then likewise, the USDA debt ceiling was doubled from 100 million to 200 million, which gives a lot of space for DAI supply to grow without a lot of governance action necessary in increments. Likewise, the PaxA debt ceiling was increased. The total debt ceiling in general was increased to very near $1 billion. And then this has to do more with liquidations, but the box parameter changed from 30 million to 15 million. So whenever liquidations are happening, they will happen at not intervals, but a continuous running balance of like 15 million DAI at any given time, so that Black Thursday like events won't happen with liquidations. So I hope that answers those questions. And Anna linked the YFI collateral status index thing, so check that out if you're still here. And so yeah, let's go through the relay. So the relay is ordered by governance first. So the votes this week that happened, it's kind of hard. Sorry, it's kind of hard to say they happened. Well, yeah, I'm gonna cut myself off there. These are the votes that have happened and are happening this week. Changes to USDC-A, PaxA, and the box parameter, which just passed. Yeah, it passed, and these were approved. Oh, all of this information was here. I'm a dummy. I just wasted like 3 minutes. Apologies. So some MIPS updates. The Maker Improvement Proposals Framework provides a clear process for Maker governance to change the protocol as needed. These are the various MIPS and sub-proposals that are part of this month's governance cycle. They're currently going through their inclusion polls, which means if they all pass, then they will be bundled together and will go to a governance poll before finally, on the last week of the month, going to an executive vote and actually being formally implemented. And I'm not going to go into the discussing every single one of these. I guess I'll just really briefly try to describe each one. So yeah, domain team onboarding, I believe, is onboarding either Primosh or somebody from the risk team to be on the risk team, well, be kind of formally verified as the risk team. There's the domain team onboarding for smart contracts, which I believe is also naming one or more people to be formally identified as a smart contracts domain team. There is the Loopring collateral onboarding, the Comp collateral onboarding, and the Link collateral onboarding. So these are the 3 that had all the domain work requirements. And if these pass through the executive vote on the last week and are bundled all together, we're going to see 3 new vault types. So that's really exciting for the end of September. We cannot stress how exciting these are. And then, yeah, there's a declaration of intent, which is just the Maker protocol, Maker governors voting that they do intend to develop this on some roadmap. Obviously, if we can have things kind of in the blink of an eye, I'm sure MKR voters would totally implement a DAI flash mint module because DAI's supply is so important for the ecosystem. And so, yeah, this is a declaration of intent. If it passes, it basically says that MKR holders are willing to fund and discuss and continue with this idea of a DAI flash mint module and implement it somewhere in the roadmap for development. And then lastly, the MIP15 dark spell is a way to do bug fixes in the Maker protocol while obfuscating the code so that people can't reverse engineer the bug fix for the duration of that, whatever the governance delay is. So the way the Maker governance works is that a change is passed and there's like a 4-hour, I think right now is the time period, delay before the change is executed. So if there's a bug fix, then that gives somebody 4 hours to kind of look at the code and be like, oh, this is the bug. And then, they screw everybody, and that's not good. So clearly we need a way to obfuscate the solution and kind of pass it through formally kind of recognized parties like the smart contracts team, or maybe even eventually an audit team or something like that. But the dark spell mechanism is more granular. It's strictly what the standards are for submitting the bug fix and a bit of the process about how to go about approving a bug fix. If you're interested in that, there's a discussion thread here. And by the way, if you're interested in any of these, the discussion threads are here. So the Maker Relay team has been hard at work listening to your suggestions, and yeah, all these things are here. So sweet. There is a number of proposals in the request for comment phase. I'm not going to go through all of them, but yeah, just look through this list. You guys have the link, so I will. Yeah, I'm not going to go through all of them. All right, sweet. So Maker governance has a monthly cycle, which the MIPS framework is based on, and it also has instituted a weekly governance cycle for more emergency actions. And so, yeah, so here are some of the governance polls that are going through the weekly cycle. There's a Vault compensation plan approval vote that is happening right now that ends on September 22nd. These are governance polls, of course, and I highly encourage you as an MKR holder to participate in those. And then, yeah, we're polling to reduce the PAX A and USDC A liquidation ratios, and I believe that they were just lowered to 103%, but I think the winning vote for this one, if I'm not mistaken, is actually 101%. So it's going to give even more power to generate DAI from less starting capital of USDC-A. And so, yeah, there is a big discussion. I think over the last few weeks, the community has been split between making it too low or too high. But given the state of the DAI peg right now, I believe that the community is actually willing to take on more USDC in the collateral portfolio in exchange for basically helping the peg return back closer to $1, if not to $1. There's a poll right now happening to approve a new TrueUSD implementation with original risk parameters. So the USD contract just updated, and yeah, we had onboarded them as collateral a while ago, and subsequently that vault did not work because they updated their smart contracts, their wrapper, without really notifying anybody. But they came on, they communicated as a team, and basically the dependency was recognized, and yeah, so they are being updated, or at least the governance poll on whether we should update them is kind of happening. So additionally, a base rate adjustment is happening, so you can vote on the base rate. I believe the current base rate is -2. If somebody in the chat has that information, what the current base rate is, that would be really helpful. But yeah, I believe it's negative 2% right now, if I'm not mistaken. Yeah, Brian says negative 2 sounds right. So yeah, that's what's happening there. And then quantitative easing, also known as manual PSM, is a proposal that is coming up to a vote. And here's the discussion. I personally have lots of thoughts about this that I will not share on this call for the sake of time, and but a lot of other people also have thoughts, and there's a really lively discussion thread here. Highly suggest you check it out. Quantitative easing is a scary word in today's day and age, and so yeah, there's quite a lot of participation. 55 voters on one poll, 37 on the other. And basically, this is kind of coming out as a result of a weak peg. And, how do we fix it? Is quantitative easing kind of like our only option? Which it's not our only option. There's also stuff like Lev's proposed Vox and other solutions as well, like the Flashmint module that might happen. Anyway, the community greenlight polls are going to happen next week, and so you can refer to the collateral status index for specific updates. But yeah, the community greenlight polls are basically, anybody who submitted a collateral application gets a greenlight poll, and if the community is like unanimously yes, that ranks it a little, higher in the priority list for the domain teams to do their work. And so if there is an obvious no from the community, that makes it really easy for the domain teams to say they're not going to work on this. So yeah, community greenlight polls as a signal mechanism to the domain teams is really important. And those are happening next week, so don't worry about those just yet. Some updates from the domain teams, smart contracts. The base rate will remain unchanged this week at 2%. So it's not negative 2, it's actually positive 2. I don't know if that's a typo or not. And Dark Spell is in a formal submission. Typo? Yeah, so it's negative 2. Oh, interesting. Anna, I know that you're in the chat. Can you actually? Yeah. I'm gonna verify this and make sure it's cool. So all right. Yeah, and the Dark Spell is in formal submission, so Will Barnes has spearheaded the Dark Spell, and it's really exciting that it's in formal submission. There's an ongoing signal request to increase the USDC debt ceiling. Yes, so this already happened actually. The signal request came into fruition as a emergency executive vote over the weekend, and we passed the USDC debt ceiling increase from 100 million to 200 million, which is really great. Really, really, really great for the peg. Can't be understated. Update from Oracles. There was a whitelisting proposal for TBTC on the ETHBTC Oracle. They were whitelisted before, had a bug, and they fixed that. The proposal is passing. Yeah. Open sold put options against ETH that don't expire until June 2021, and they have no way of changing which oracles these use. Options are being discussed here. This is actually very interesting because we were just talking about open. Yeah, fascinating. I am going to read that later. So, update from Risk. There's some research happening on CUSD and SaveDai. There is a collateral evaluation on Link that was compiled by a community risk analyst, William Remore. There is a collateral evaluation of Comp as well. Take care, Spencer. Thanks for coming on. Yeah, and I know we're at the top of the hour, so feel free to hop off if you guys need to. I believe I'm almost just about done. But really quickly, yeah, so that's about it from Risk. They posted a few different pieces here. Their assessment, both Link and Comp are reasonably liquid and have conservative initial risk parameters in the analysis. It's up to governance to determine the final parameters. Comp has high DEX volume, which bodes well for liquidations. More work is coming on a different rate setting approach and understanding the current risk exposure of vaults. Ideally, this will help governance know what users are doing with DAI before setting rates. There is an opportunity to pitch in and become a contributor to Risk. So yeah, if you are interested in contributing to Risk, I highly suggest you reach out to Primoz Cortez. He's a regular in the forums and in the Rocket Chat. In Rocket Chat, his handle is @Doopson, so check that out. Current events, I'll let you guys read it. I won't cover it in this call, but this is Maker Relay 12. State of the peg is not fun. We're at like $1.04 right now. As you can see, here's a 7-day plotted graph of 24-hour volume weighted averages, which I find to be a really great metric. And you could see kind of over the last week, especially if there's this really accelerating curve in the last day on the 14th. But now, actually, since we raised the ceiling, you can actually see that. Oh no, not DieStats, die.decipher. You can actually see that that number has gone down. Actually, I'm not gonna load die.decipher because it might take a million years. Actually, it seems to be working pretty quick. Done, done, done. Yeah, cool. So if you just go like this, yeah. So as you could see, as a result of the very, very recent governance changes, the DAI peg has turned around, and we will see if that is sustained, but that is the current position that we are in. And so, I'm going to skip this over. Volume on DAI is not really super important. There's a ton of community highlights. I wish I had more time to get to these, but they are in the relay, so check out the relay. That's my message to you all. And so, yeah, there's some open calls as well listed on the relay, and I can't stress this enough. There is actually a really useful calendar link, which I can't find. Calendar? Is this the link? Yeah. So if you import this calendar, it has a ton of the different meetings. And also governance details, so you could see when the inclusion polls end, etc., etc. So check that out. And yeah, I'm gonna leave it there. Thank you all for sticking around for an extra 3 minutes. I appreciate you. And for next week, I believe the call is reserved for the governance comms team. So thank you all. Have a lovely Tuesday afternoon. I definitely will try to do that myself as well. And yeah, thanks. This